It's going to be painful. Real estate investing is never easy. There are cycles. There are some times where it seems like you can't miss.
Hey, Tom here, Flip Anything USA. So today, having a visit here with Michael Zuber, author of One Rental at a Time, and also has a YouTube channel of the same name. Welcome, Michael.
Tom, thank you very much, man. It's been fun. I've been seeing your stuff for a long time, so it's nice to talk to somebody who's been in the game for a long time. So this should be fun.
Yeah, I think so too. I really don't. You don't see me collaborating or interviewing much, and a lot of it's like CoffeeZilla says, 95% of the guys out there are complete frauds. Everybody knows I'm not shy about pointing things out, and I'll comment on videos, people that are perfectly legit too, or seem to be. But,
Yeah.
but I thought there's people that I thought that were pretty legit in the beginning, that after I took a better look or heard more stuff come out of their mouths, I quickly realized, they don't know what they're doing, or they're not real, right? You've had some of the same experience, right?
Yeah. I mean, we're about to see it again. I've been doing this 20 plus years. Real estate investing is never easy. There are cycles. There are some times where it seems like you can't miss. That brings in the fraudsters and the get rich quicksters and all of that. I think we're going to see a lot of financial engineers get crushed in the next 2 years, and it's already started. We've seen some people in Ponzi schemes. These things that Ponzi schemes being identified. We're seeing people lose $100 million in 3,200 Houston apartments.
Hit that subscribe button, hit that like button. You don't want to miss my channel. I've been doing it for years.
It's going to be painful, right? I feel for the limited partners who got suckered, but financial engineers are going to disappear, and the good operators who know the numbers, who frankly sold at the peak, and I love buying when there's motivated sellers, so I look forward to the next couple of years.
Yeah, there definitely going to be some opportunities. I always say everybody's a rock star in good times. And,
Yeah.
Times when I thought the market I thought the market should have gone down before it has. But the thing is, and I say it all the time, what you can't anticipate is government intervention. And government intervention they save, they pick the winners. You've heard that for years. And they intervene and they help people that aren't even supposed to be helped. I just hope if we have a big collapse again, like we did in the late 80s, that we all get to have access and get a piece of it, because
I'm glad you said the late 80s, because a lot of people in YouTube University, where we play, only remember the Great Recession. What we're about to go through is nothing like the Great Recession. It's far more like the 80s in the S&L crisis. I wish more people would look at the S&L crisis, the Resolution Trust, RTC, see what Sam Zell did, right? Sam Zell made his bones in the S&L crisis.
Yeah.
Right. So I think you're right. You're the first person that I've heard say what I believe, and this is going to be far more like the 80s than 2000. It's not 2009.
Well, and I don't even want to say it's going to be exactly like the 80s. I'm just saying if it does crash, I just hope that we get access to it, because in 2009, not everybody got to get, they didn't break it down where everybody could take a piece of it. They just sold the huge chunks. And, a lot of people, foolishly will think, Blackstone, I'm going to do a Blackstone, but they jump in, they usually jump in when it's too late, and they don't understand that Blackstone is made up of, 1 million investors anyways. And, all the little guys get, damaged that are within the group sometimes. So, but I've always been a one-man show, and I assume you pretty much have been too.
Oh yeah. Yeah. It's all our own stuff. We don't have partners on anything. I have raised private capital, but only as debt, not as equity.
Sure.
A couple of different times, right? Once in 2009 and then once in 2018 when I was flipping pretty hard. But yeah, everything's ours. We don't have partners. I don't want that extra stress or risk or nonsense, frankly.
It's funny. I mean, I've had a handful of partners here and there just out of consideration, friends from high school and stuff like that, some buddies. And actually had one partner, really, he's dead now, but really, really a great guy. Went to the academy with Schwarzkopf, and he was a small partner. And what it was is had been so tenaciously working to take his property away from him that finally he said, listen, Tom, he goes, I'm not going to sell you any. He said, but I'll tell you what, if you ever need a partner, he goes, I
Yeah.
want to be your partner.
There you go.
So he's passed away and now his kids are my partners. Michael, when did you first get interested in real estate?
So I first got interested in real estate after losing 160,000 bucks in the stock market. So 2001, right? I had great success in the stock market, like 99 to 2001. I turned 7 grand into almost 200, only to foolishly lose 80%. And I walk into a Borders bookstore depressed, and I find that purple book that changed my life, Rich Dad Poor Dad. I had an advanced degree. I was an accountant. Numbers come easy to me. And dude, I had nobody ever talk about real estate ever.
Mm, mm,
And I was 30 years old. I was 30 years old before I thought about real estate as an avenue. So pretty
right.
shocking.
Yeah, yeah, that's interesting. I'd been interested since, before I bought my first piece, but it was the interest of of my mother's boyfriend at the
Hmm.
time. And I'd go down to convention center and back in the old days, in the 80s, or 70s now. Okay, we're in the 70s now, really. You'd go down to like a convention center and you'd have 4 or 5 of the gurus,
Mhm.
and
Yeah.
they would each take a turn and they'd talk for 15, 20 minutes. And then they walk to the back of the room and there'd be tables
Yeah.
set up where they'd have their stack of books. And some still in the pack of the box where they got it from the publishing company, and then they'd
Yeah.
sell it, might have a course for maybe $100 or a book for 15 or something like that. And
Yeah.
that was it. They'd each take their turn and a person could pick between them. And so and I just did a little video on McCorkle
Oh,
because
wow.
yeah, just because he went to prison for he got sentenced. Him and his wife got sentenced to 24 years. They were just
Wow.
out and out fraudsters. I mean, they put their decals on helicopters and yachts, and they take a 15-minute ride and stick the sticker on it, and
Yeah.
then
Yeah.
it
Yeah.
was
Yeah.
their own.
That's funny.
Back in 2001,
Mhm.
you decided to buy your first piece of property. What did you buy?
So we bought a 4 bedroom, 2 bath house, Norris Drive, 1818 Norris Drive East, Fresno, California, for 107 grand. That was our first rental. And again, we live in the Bay Area. So Fresno was like 2.5 hours away from us. I learned very early, live where you want, but invest where the numbers make sense. They don't make sense in the Bay Area. They never have.
Mm.
And so we chose a market that was about 2.5 hours away. But the first one was a house.
That you didn't live in.
Nope.
Yep.
Nope. No, nope.
That's same here. I lived in the fifth house that I purchased. But the first building I purchased was a commercial building. And I started a business at the same time and I was broke. So I moved into the building and lived in the building. But so you bought that house, and what were you doing I always tell people, get a skill. You got to have a skill to make some money. So you obviously had a skill if you were investing in the market from the beginning. What was your expertise, or what are you good at? What did you go to school for if you went to school?
Yep, I did. I went to school, got an MBA. So I was an accountant that turned into a sales guy. So I was a software salesperson and I had a quota around my neck, ran teams the last 12 or 15 years of my career. So I was in software, I was a salesman, and I traveled the world. That's really why I had to have property management since day one,
Hmm.
because I was frequently in 2 or 3 different countries every week, for 8 to 10 weeks out of every quarter. I was gone, right?
Right.
So yeah, so I was my job was to secure capital, make money, and find deals. And then my wife Olivia, she would do the books, the accounting, and then we paid a PM to deal with the tenants.
Oh,
And it worked that way for 15 years.
no, very nice. So you just basically, well, so you lost, like I say, you kind of lost your butt in real estate. I mean, I'm sorry, real estate in the stock market. What particular stock took you down?
Enron and WorldCom were the two big losers.
Wow. Wow. Interesting. Yeah, my mom actually uh got taken down by toys.com. I think the stock literally went to zero.
Yeah. Well, there was plenty of that. I was hot and heavy selling software in that time. It was weird. I remember going to one company who had just raised 100 million bucks, had racks and racks of Cisco gear and Sun Micro gear, and they were out of business in 90 days. They never unboxed anything. It was a wild time. It was crazy.
Wow. So let's talk about that for a second. You took 7,000, turned it into 200, and I know ultimately you lost it all, but it's still, you did make that money
Yeah.
in the stock market. How long did it take you to turn 7 into 200?
It's a little less than 2 years, a little bit under 2 years.
Okay. So yeah, so that's pretty fast, but that's in the .com era, which really is a unique time in stocks, and people maybe don't recognize it or realize that.
Yeah. Here's what I would take from that experience. For the first 6 to 9 months, I was doing the work. I was honestly reading financial statements. I was digging into earnings call. I was doing the work. My 7 grand probably turned into like 25.
7 turned into 25. So you were
Right.
constantly trading, you're saying?
I was trading. Yeah, I was investing. Some of that was just equity growth. I was probably in and out of 4, maybe 5 trades in that time frame, but it was all stuff that I felt like I knew the numbers. I knew this, I knew that. But what happened in that era is you couldn't miss.
Mm.
You just couldn't miss. So I stopped every trade I would do less work, and it seemed the less work I did, the more money I made. It
Yeah.
was a wild time.
Yeah.
And then I started getting really stupid and doing options and all of that. And again, not missing.
Right. Yep.
And then, you get got by, 2 frauds where people go to jail. So it was an eye-opening experience.
Yeah. Yeah. In fact, when I started with my first property in 81, not long after that, that's like when the PCs were just really becoming available to the public.
IBM, yeah.
Yeah. Yeah. And then there was Eagle Computing. There was other places too that had
Sure.
Osborne. You probably know the Osborne computer from way back.
Way back, yeah.
Like you say, when things are just trending and going like crazy, you can't miss. Like you say, anything you buy, it doesn't matter. There's so much foolish money coming in behind it. It raises everybody's boat. And that's with real estate too, when you're in, when you're in an upcycle.
Yeah, no, I mean, that was very much like, because again, I bought in 01. If we fast forward to like 05, so 4 years, maybe 5 years later, I had 8 houses and everything was up and to the right. And I actually went to a Bruce Norris event where he talked about the California crash. He talked about something called the affordability index. I had no
year
idea.
Are we in now? What year?
It probably was late 05, early 06,
Okay.
2006.
And now you got 8 properties at that time?
8 houses. Yeah, we had 8 houses. And Bruce Norris is telling us that, California is going to crash. I'm like, come on. It's not going to crash. Real estate never crashes. It's always up. Not since the Great Depression had real estate crashed. And then he talked about something, Tom, called the affordability index. And if you know who Bruce is, he throws all these charts up, and he's a data nerd.
Yeah, yeah.
And I'm like, oh my God, I think he's onto something. So I went home and I looked at Fresno, which is a market he knew nothing about because he was Southern California.
Right.
But and I was like, you know what? He's right. It's like, because affordability in Fresno usually averages about 35 to 45%, which means roughly a third to a half of the people can afford it. It was like 12. It was toxic paper being issued. So what we did is we took action. We 1031 all our houses within about a 9-month, maybe 10-month period, and moved everything to apartment buildings. And then the crash happened. I mean, that first property I bought, Norris Drive, I talked about earlier, we buy it for 107. We sold it for 263 less than 3 years later. It ultimately rose to 300. So we sold a little early. It crashed to 75 grand.
Yeah. Yeah.
It's wild.
Yeah. A lot of people can't believe that. And, I even talk about, Ben Mala, who I like, and I've talked to Ben, and, Ben is younger than me and hasn't been in the business as long as I have been as an investor. And I think that hurt him a little bit because I don't feel like he respected or understood how high real estate interest rates can be because of from where he started. And so, he got caught in this interest rate, because I've been telling everybody, hey, refi, or, if you want to get rid of it, this is not a bad time to sell it, but it's really a good time to get a locked in rate, because I've had variable rates since the big crash, we call it, right? 2009, I'd had variable rates then. and the interest rate
Yeah.
dropped 3% almost overnight,
Yeah.
like in 6 months. But anyways, because now Ben's paying the price, you know, he's probably paying 4.25 on roughly $150 million
Wow.
in mortgages. So that's like $7 million hit a year. So
Yeah.
yeah, it's a big one. And he even says, you know, I really like Ben for that reason, that he's very honest.
Yeah.
He shares it. But what he
Yeah.
said something that was interesting to me, that I caught. I don't watch him that much, but I jump in here and there and watch him, and I do enjoy him. And he says, he goes, well, he goes, nah, he goes, no, basically what I come away with, he's not making any money right now,
Yeah.
income wise.
Yeah.
But he says he put enough cash away that he can live on his cash until a better day, hopefully, right?
Yeah. 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 I've watched some of his stuff. I like him just because how upfront and direct he is. He's quite the character. But yeah, he's freely admitted that he should have had rate caps and he should have refied his debt. He bet and unfortunately craps. He got.
Yeah, but nevertheless, even though those of us that got ahead of the game and we refied with and I have a lot of commercial, industrial, and office, primarily commercial, industrial. I have residential too, but I mostly trade and flip that stuff. But the commercial, industrial, office that I own, all of that is subject to going up. You know, all those rates are going to go up because their day is coming in, 5 years
Yeah.
from when I did
Yeah.
it 2 years ago. So, and I
Yeah.
don't, I think rates will be higher than they
Yeah.
are right now. Then that's what I think. Yeah.
Really? You think rates would be higher? Oh, higher. So what do you call rates today? 8%? Just call
Yeah,
it
right
round
now,
number.
I mean, let me put it this way. I got 2 lines of credit in the last maybe 2 years. The first one, these are multi-million-dollar lines, but one was 4.5%, and the other one 7.5%.
Yeah. Yeah. I
And
think rates are going to be
probably
higher
eight
for
and a half.
longer.
Right now, I think it's about 8.5.
Yeah. One of the things I got lucky on is there was a non-QM lender that actually allowed me to get 30-year debt at sub 4% on my offices.
Yeah, nice.
Velocity Mortgage. Yeah. I did a lot of refis as you did. Obviously, all my residentials are fixed, sub 5%, all of them. But yeah, I've got some commercial debt now at 399 um, for 30 or 28 more years. So
Yeah, I do too. I
I like
do. I
that one.
have. I actually had originally. I borrowed 3 million from. What is it called? They're already out of business.
Yeah.
Yeah, I mean, it's a bank that's already gone, but they'd
Wow.
flipped it up and got taken by Wells Fargo. And then when I did refi that, I get fixed. Not all commercial. You can get
Yeah.
commercial rates that are fixed,
Yeah.
but some you can't. And
Yeah. Some you can't. Yeah. Absolutely.
very little debt anyways now. So it's, that's my money is always in the form of lines of credit, stuff that I can borrow
Okay.
and buy again.
Yeah. Makes sense.
Safe place to be.
Yeah. I like it. I like it.
So, okay, so you went to listen to Bruce Norris, you sold that, you converted your assets, 1031. A lot of people have misunderstanding on like-kind properties. Like-kind means land it's everything sitting on a piece of land. Sitting on a piece of land, it's like-kind. And
Yep.
so you threw it into that, and
Mhm.
has that been your emphasis ever since? It's pretty much multifamily.
No. So no, I'll buy whatever the best deal is. So for a while there, it was multifamily clearly. But when real estate prices crashed, I was buying the whole way down. I mean, that first property, Norris Drive, right? Ultimately is 300. It retrades at 75. I was buying properties like that all the way down, right? The cheapest house we bought in like 2010, 11 was 28 grand. And it
Yeah.
was a house on a lot, right? It wasn't a burned down shack. So,
And what do you figure
yeah,
it was? What was market on that one when you bought it?
I don't know. So once we cleaned it up, because it was trashed, it had homeless people in it, all that stuff right from that time. It was probably worth 100 grand that day.
Yeah,
If it was a functioning house, it's
right,
worth, 350 or 400 today.
right.
Um,
And
but
is that
yeah.
when you held on to?
Oh yeah. Yeah. I rarely sell. In fact, I do a little, I usually prune one property a year, my worst performer. Sometimes I sell and keep the cash. Sometimes I 1031 to a higher class asset. But yeah, we're buy and hold. We rarely sell.
Right. Yeah, I generally will turn, I mean, I am always looking for commercial, industrial, office,
Mhm.
but I'm always buying houses. I mean, I'm always buying houses. I tell people, you look around on the street, every car, and you see them, take a drive, you'll see 100,000 cars just going from
Yeah,
A to point B. Every one of them are heading to a garage somewhere.
that's right.
So,
Exactly, exactly.
yeah. So the residential stuff, it just, there's more of it. So there's more opportunities, I think,
Mhm.
in land, of course, too. All right. So now, you went through 5, you started building your assets up.
Mhm.
Like say you hold, you trim. So when you trim, you try to avoid capital gains. You generally, if you can, roll it into something
Yeah,
or
if I can, I will 1031 absolutely. Trying to always upgrade the portfolio, newer, nicer stuff. But there's been a couple of times I don't want to be trapped, right? I don't want to get into a bad deal.
right.
So there's been a couple of times in the last decade I didn't find something that I thought was attractive enough, and I just, I paid the taxes. It's
Yeah.
okay.
Yeah. No, it's a smart thing to do. I tell people there's only thing worse than paying those taxes is buying a bad deal.
A bad deal, exactly.
Yeah.
Yeah, people don't get that. People like, what are you doing? I'm like, are you kidding me? I don't be trapped on these piece of junk properties.
Yeah, especially if it's long-term capital gains.
Yeah, yeah,
But
yeah.
yeah, that's actually on Ben, that's his problem is, and I've got a little bit of the issue, but uh, is you get an asset, you think, oh, you know what, I can sell this and it'll clear everything up. You go, well, wait a minute, my basis is zero.
Yeah, your basis is like, what? Yeah.
Yeah, exactly. So it's going to be a substantial hit. And I know you're an authentic guy and a real investor, and it's a wonderful thing. So
Yeah.
okay, let's just kind of keep moving. You got your hold stuff, which is your
Yep.
profitable rentals, and then do you ever buy to flip, or do you just
So
always
yeah,
long-term
so
hold?
for 15 years, I had my W-2, right? So from 30 to 45, I had my W-2. I went all the way up. I was a VP of sales for the last 5 or 6 years. And we never flipped. I didn't have time. That would be a job. My market's far away. No, the answer is no. But when I'm 45, February 2nd of 2018, I walk into a room to get my new sales plan, my new stuff, right? Every year a sales guy gets new stuff. And I get a bunch of shit that I don't like, and I quit. Right? We have a conversation, quit, fired, whatever you want to call it, and I'm out. I went to work that day because I always planned, Tom, to work till 50. I love my job. I'd have done it for free. I was really, really good at it,
Nice.
and I went to work thinking I was going to be, get my new box of toys to play with for a year, and I didn't like the toys I was given.
Yeah,
So I text my wife, Olivia, on the way back to my desk to pick up my family photos. And I'm like, honey, I'm coming home. I don't work here anymore. She thought I was kidding. I wasn't. And so I go home. And the first couple of days, I called everybody in my phone. I was excited, right? 45 years old, free and clear, blah, blah, blah.
you got enough
But
real estate income. You don't have
yeah,
to. Yeah,
I don't have any crazy wants. I don't need a private jet. I don't need anything stupid. Our bills have been paid for years based
sure.
on real estate. And about 2 weeks in, Tom, I get depressed.
Mm,
I've never been depressed. I've
mm,
always been that guy that the glass is always half full. There's always
sure.
opportunity, but I got nothing to freaking do.
Yeah,
So the answer is I start flipping properties in 2018 because I was bored, and we
yeah.
did 56 or 57 of them.
Oh, nice. Yeah,
Yeah.
that's a considerable amount. Yeah, that's funny. So you didn't like the new job they were offering you, basically, right?
Yep.
Fair to say.
Mhm.
It's funny because I had the same thing. I'd had me when I was 27, and I already was self-employed. And I had a customer come in. I'd been in business 9 years, 8 months because I started my business when I was 19. And guy comes in and he's rude.
Yeah.
And I'm like, you know what? And he said, "Oh, I can make it myself for that." And I go, open the door and I go make it.
Yeah. Yeah. Go ahead.
I wasn't that nice, actually. But,
You weren't even that nice. I like
yeah,
it.
but I realized, oh man, I've never been rude to a customer, to be honest. And I thought, man, I think I'm burned out. A buddy of mine that was, he's an old guy, 40, and I said, man, I'm so sick of this. And he goes, Tom, you own that still? I go, yeah. He goes, you own that? Yeah. How about that and this? We're standing and this and that. And yeah, he goes, why are you even working anymore?
Yeah.
And it was I thought, yeah, What I
Oops.
had.
That's a good
And
question.
yeah, and it was just so coincidental because the next day there was an ad on a business broker. I was just thinking to close I was just going to rent the
Yeah.
building, not sell the tools because I was a
Yeah.
cabinet shop. And but I see there's a business broker on the front of the
Oh,
paper.
okay.
I thought, oh, I can sell a business. Like what?
Yeah.
And
Yeah.
so anyways, and so I called that guy, business was sold in 2-3 weeks. And here's the big thing is I knew I never wanted the company back. And I told the guy, I said, whoever buys it, if I carry any paper, and I did, I go, I want it secured by their home or a piece of real estate.
Ah,
And
there you
that's
go.
what we did. And 18 months later, they were throwing their hands up and said, we don't want it. We want to give it back to you. I go, I'll discount the note.
Yeah.
Cash.
Yeah, exactly. I like it. Very cool.
But yeah, and that's a great story because, and it's one that a lot of people have had that have accumulated real estate over time. All of a sudden things change. Like, you know what? I think I'm done. Start shaking hands, walk out the
Yeah.
office.
See ya.
Yeah.
Peace.
Wow. Well, yeah, that's a great story. Really, really enjoyed it. Anyways, Michael, I appreciate you taking time to come on.
Of course.
Here, we can always do it again sometime, right? But
You got it.
So yeah, thanks for sharing, and it's a pleasure to finally meet you in person. And like I say, folks, it's one rental at a time is his channel, and also a book of the same name. And we'll put the links below.
Awesome. Thanks, Tom.
All right, thank you. You want to learn how to make millions of dollars in real estate? I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, flipanythingusa.com/webinar. Sign up for it. You can talk to me face to face if you want. Don't waste any time. Hit that subscribe button, hit that like button. You don't want to miss my channel. I've been doing it for years.